Wednesday, June 26th, market analysis, Stan Ehrlich. Good morning. Little late today, 10:13 California time, usually 9:45 to 10. But I'm kind of waiting for these markets to start to make some downside progress. Right now, and you guys know I start out with the stock indexes and go to futures and sometimes sectors, crypto, cycles, forex, stocks, and a variety of things. But we have had two sell signals in the last 5 days since Thursday's highest high for the E-mini September futures contract. 2 days later, Monday this week, another bearish engulfing ER official sell signal that is, it's still okay. Both signals are. I just need to have it start to head south right away. I don't want it to make any highs higher than today's highs. Getting above Monday's highs would cancel out Monday's signal, but still be in the ballpark for an acceptable rally based on Thursday's highest high, the top of the market signal. Kind of like what we had back here on May 23 and a couple of days later. Similar. And that dropped very quickly for 2.5 days right afterwards. My expectation at a minimum is down to 54.33 or 5400 area. And that is just the beginning, because I do think there's a very good chance that we could come all the way down to the ballpark of 5,000 flat and even 4,900, 4,800. Maybe that's October, though. That's quite a ways. October lows. Last 2 years, I pegged them in advance for you guys. So hopefully this year again. And the 1-minute chart on the E-mini has just had a little bit of a rally, but it stopped at a resistance line that I've had in place for quite a while and starting to slip some. We're still short from an ER1 overnight, very loose stop that hasn't even moved yet for a few days, and could be adjusted to lock in a profit of some sort and or anything you want, as long as it's not too close to current quotes, of course. So the trade's working very well so far. This is the important line at the moment in a support area, because if it can break below 55.10, then you'll be making new lows for over a week and probably a lot of sell stops down there, and a downside fast, sharp break should ensue. Down to 54.80 same day, or maybe in a day or and a half or something. And then I'm still looking for lower levels, as I've mentioned on the daily data chart. The spider on top, bearish engulfing, sell signal, still short, green trade line, great. Just needs to have that break. SPY, 1-minute chart, still short, bouncing up and down here with a little bounce. Didn't get short very gracefully in this case, but it's profitable, and that's the name of the game. QQQ, still short. Daily chart, probably going back a little too far for what I want. And although we're stopped out, actually, we're out of the trade. We had a profitable trade. It lasted 1, 2, 3, 4 days or so, 4 or 5. And hey, profitable trade's better than a loss. That's for damn sure in my book every day. This is the trade based on a 1-minute chart. Got short with a little bit of a bear trap here. Quite nervous situation when it rallies against you immediately from getting short at a bad price. But by the end of the day, dropped way below our short sale price, closing with a profit, making a little more money, making a chunk more money. Yesterday, taking a lot of it back, and today we're out with a profit. Next chart, NASDAQ, short from the top of the market on the NQ. All of these indexes, except for the Russell, even the DIA, and I'll show you in a moment. NASDAQ, high day, bearish engulfing, ER sell signal, love them. Profitable trade got stopped out of this morning. Did very well, got short at 2202.5, out at 20,002 and a quarter. So we made 20 almost exactly. And this is the trade on the NASDAQ 5-minute chart. Got short reasonably well. profit, tiny loss, and that was about it. From here on, just shortly after we got short there, it was never a loser. The NASDAQ has been the weakest, the fastest, the quickest, and stayed down the most, etc., for this last approximate week. And I think it's going to continue to do exactly that. The one that hasn't gone down as quick, as fast, as much has been the Dow Jones. Here's the YM and the 5-minute YM. I didn't want this the daily. Sorry, YM. Double topped out with an ER sell signal on each exact high of the rally. You can't get more accurate. Both tops, both highs are bearish engulfing ER sell signal in overbought conditions on my custom RSI. And that's it. Plus, we got a buy signal at the bottom between the two highs, right smack on the low. Okay. I need not say much more, except we just got overbought. And since I'm expecting a move down of some significance in all of the other indexes, including the YM, I think this double top is going to work. And we're going to, in my opinion, break this low at 37,898. And my minimum downside objective is 35,079 or more. What's it going to take? A month, 2, maybe even a little longer, depending upon how quickly it goes down. This is not the end of the bull market. I'm still very bullish, intermediate to long term. We did pick the exact bottom of the market October, 3 years ago. Perfect to the day. And the October low the next year. YM 5-minute data. No trade, no signal the last 2 or 3 weeks. Going back to the daily, as you can see, the sell signal was the last signal. And we're looking at no trade at the moment. The Russell, major resistance, 2 years worth of resistance levels, stopped it again back around the middle of May. And we are close to making a new low. And this is the 5-minute chart. Close to making new lows. Looks like it's going to do it with all the other indexes. Now bonds. They did top out with a double top. I was talking about that yesterday. Possibilities. And already today, and 1 day later, we are lower than the previous lowest low between the two highs. That is the downside breakout. Now, this is a fairly small formation. The depth of it is measured just like that. And you're going to grab the little line, I call it the stick. My minimum downside objective is 117.22, the bottom of a support area. And we might be able to get oversold also when we get down there. So I wouldn't be surprised. I'm looking for 117.5 at a minimum downside, but I think there is a chance we can get down to about 115.5 or maybe lower for 115. I'm not bearish. I'm really neutral to bullish long term. I think this market is in the process of making a very big long-term bottom, and I will declare, quote unquote, that to be the case past tense once we start trading above 126. I'm expecting it to be a few months from now. Notes, basically the same story, not quite a double top, and it wasn't quite overbought on the rally, but it stopped. Now we've made minor new lows for the last week and a half, sort of a little bit of a downside breakup. That's not very much well defined here, in my opinion. And I'm looking for the market to move down to a minimum of 109 and a few ticks on the notes. This happens to be this September. And challenge 107, oh, call it 108. Next, crude. Well, we're fairly firm near the high. And it looks like this used to be resistance area, now a support area, is doing a decent job of support. We're back up above the top of the support area by just a little bit. And in order to stay bullish and keep on going up, we need to make a new closing high above 81.90, closing above 81.90. 81.42, 41, current quote. Not too far away. That's about the best I can say in crude. Natural gas, low and last, low for the day, pretty much. And new lows for about 2.5 weeks, challenging a previous important low, which is the breakout point of a double top formation. These two highs, neither one of them, unfortunately, was the ER sell signal. That was, and it worked 1-2 days just fine. Now, remember, we have a trailing stop that's very tight, tighter than most. Therefore, we're able to trap a profit very, very quickly. And then you can back off, go slower after you've got a profit trapped, quote unquote. If this double top works, and of course I think it might, we're going to be going down to 1.962 or lower on the natural gas. New lows for quite a while, perpetuating a longer term bear trend. Very, very much so. So that's putting things in perspective for the last 3 years. Now, heating oil tested support, did a good job, bounced right off of it. But we have had a couple of days ago a bearish engulfing. Today, we canceled out that signal because we got above the high of the bearish engulfing, but we're still at a support resistance level and very close to overbought. I think the market's not going to go up too much more. I think it's going to stall out probably in the yellow zone, just fractionally higher than today's high and a little bit around or below 2.6. That's the area I'm thinking it's going to top out in and in the next day or 2 or 3. Next, gold, silver, platinum, copper. Gold almost made a lower low, came within ticks. And that would be a official downside breakout if it closes at or below today's lows. Excuse me, which I think it's going to do very soon, maybe today. If that's true, then we have a downside breakout and a downside minimum objective of 2143 on August gold, if it lives that long, which I think it will. Remember, bear moves, bear markets, you could say also. A bear move is simply a downside correction in a longer-term bull trend. But bear moves and bear markets drop much faster when they go down than bull markets go up. That's a general rule of thumb. And the rule of thumb is twice as fast. Could be a lot faster than that. Okay, remember COVID in 1 month. Yikes. So that's gold. Silver has officially broken out of a head and shoulder top formation. Now, a few days ago, I put the circle up here. My thought was that on Tuesday, yesterday of this week, we were going to be hopefully in the dead center of the circle. Instead, it unfortunately topped out on Friday of last week, a little below the circle. So I never got into it, which would have been much better. But it nevertheless formed its last shoulder high around where I thought, a little bit off, and kaboom. Yesterday, downside breakout closing below the neckline. Today, we're staying put and made new downside progress on the lowest lows, dropping even more. And I should raise that just a smidge. Different contract month, and raise that a smidge. That's good. So our breakout is complete. We have a lower low of all the lows since before the top of the formation. This is the first shoulder high over here in April. The top of the market is obviously the top of the market, and it's a little bit of a double top by itself. This is the last shoulder high, a couple of days early and a little bit lower than I thought, but that one was a little bit difficult to judge price-wise. Timing is easy. I'll just erase that little timing measuring stick. We don't need it anymore. It was supposed to be, well, it was yesterday, but we topped out again on Friday, 2 days earlier. What about platinum? Look at here. Oh, yeah. And the downside objective on silver is 24 1/3. Platinum, October platinum, did rally. Let me make an adjustment here, just change contract months. Yep. The reason why the bottom of the green circle is where it is because that was the exact previous high on the first shoulder and a resistance area. So we did get up to the previous shoulder heights, and we did get into my circle a day late. And so far, although we're touching the top of the circle, we're not actually breaking through it. It is also a resistance area. It is not quite overbought. I am looking for a move down very soon, immediately. Even though I can tell you we're high and last at the moment to the tick, it looks like. I need it to go down immediately, break below our neckline, and if that works, we're going to go down to 774. Take a couple of months to do it, maybe. If the pattern works correctly, they don't always work correctly. Don't give me any grief about that. No pattern works 100% of the time, and you always have to use good money management. With the ERSignals, it's an automatic trailing stop, and you can adjust it as time passes, but it's immediately in there for you, and the purpose is to protect against large losses. Adjusting it could tighten it up much quicker to your liking, personal preference. This looks like it could turn down immediately. Well, tomorrow we'll see how much higher, if at all, etc. Copper, new lows in a support area and not quite oversold at 32. Could drop off a little bit more in the support area to 4.28. Then maybe it'll touch 25 RSI and get oversold. I like what I see. I'm a little bit more bearish, but we're in that beginning zone where at any time it could turn back up some. I don't think it's going to be the beginning of a next bull market move to new highs, a very short-term rally, maybe only up to about 4.6. Here we have soybeans. Ladies and gentlemen, this is a very serious situation with the grain complex. I've been talking about a bull move starting, support areas, bottom formations, etc. But they are not holding. We are starting to see a test of previous lows almost exactly. We don't have quite oversold conditions, not quite yet. We did have a downside objective that was fulfilled, 1113. That was 3 days ago, Monday. It doesn't have too many more reasons, if I can say it that way, to go down more, except that the overall long-term trend is definitely in jeopardy. If this doesn't hold, this could drop off a lot more. I don't know, a lot more. It has to stay here. It has to start to rally. I need some sort of a bullish engulfing or some sort of bullish situation. Right now, it could develop into a triple bottom, which bothers me because they're fairly rare, implying it's not going to hold. What about soybean oil? I'm afraid to say it's pretty much the same damn thing. I talked about a head and shoulder, bottom, shoulder, head, shoulder pattern, normally too large, 2 years. These things are usually a month to 2 or 3 or 4 for small to medium, 6 months. Maybe a year is on the large size, but 2 years, not happening. Very, very, very rare. I've seen them bigger, but I've been at this 52 years. Neckline, etc. Upside objective 92 or 93, outrageous. So I think this is going to turn south. Challenge the lowest lows way back in, what was it, March? Yeah, the end of March of a year ago. Turning bearish unless I get a bullish rally right away. Meal. Now, it hasn't broken down completely yet, but we're almost low and last, challenging Monday's low. If we start to break below last week's low, we'll probably just nosedive into this little bit of support, Nothing is turning out to be bullish here. The double top with the sell signal on the second high, exactly on the second high, I think is going to work. The minimum downside objective is 325-ish. And I think it'll happen in the next couple of weeks. Corn. It did it. We are in new low ground on a likely closing. Well, wait a cotton picking second here. I misspoke. We are extremely close to a new low since the lowest low, which was on February 26th, probably March corn. That was 425 and a quarter. And yep, 425 and a quarter. And today's low is super close, 427 flat. A penny and three quarters. Five, what's the say? 7 ticks. So watch out. Big bear move coming in green. I think, unless it can turn around. Now I know it's oversold. I just don't see it happening yet. I got it, I know what to look for. And if it doesn't happen, I can't say it's happening. It's not. This could drop like a rock for a couple of days. What about wheat? Same, almost identical situation. Support's not holding. It is more oversold, which makes it a little more likely to rally. But I ain't got nothing. This market is still new low, about the lows of yesterday at the current quote, nowhere near the high of the day. It could, if it were to rally all the way back up above yesterday's high, make a bullish engulfing green like the bottom of the market we caught on March 8th to the exact day. But all I can say is this is prime territory for the beginning of something bullish, and it just so far isn't showing what I want. Next, we got a very strong rally in cattle. Blew through this resistance level, a couple of days of effort. Today, wow, way up there to the next resistance level. And now it's overbought even more. The third day in overbought conditions. I think it's about to top out. It's just at higher levels than I thought, which was yesterday's high and the day before. Now we got a new high to deal with. We're high and last right now. Overbought condition, resistance area. Watch cattle very closely for a potential turn down. And what about Miss Piggy? Oh, hey, we've got a brand new buy signal now, today, in progress, period. It's almost exactly at the same prices, but just a tiny bit below the low that we saw, which was a green bullish engulfing, worked for about 2 days. And now I'm going to copy this circle and put it on top of today, making some high-low adjustments to the circle. Just a little bit. Okay, good. That's perfect. So today we have a brand new bullish engulfing and a double bottom possible. Let's see, the arrow starts there and goes to about right here. That's good. In hogs, watch what happens to hogs. First, I need a close above 92.45. That would tell me the double bottom's good without making any other lows, without making any lows lower than today's lows. This is great. One quick check on the E-mini before we part for the day. 1 minute E-mini. Oh, good. It started to make minor new lows here, slipping off a little more. And the rally, which we were, I made a mistake on that. I grabbed the wrong little box here. Come on, tab. Move over a little bit more. There you go. Good. Where am I going? I wanted to expand the scale. That's right. Good. So that's beans. Sorry. E-mini. Expand the scale. Yeah, this is a 5-minute chart. So in the last, we're challenging the lowest lows 15, 20 minutes ago, about when I started my YouTube. I think it's going to make new lows. I need to want to close below the dot dashed yellow line back into the support area again. and then breaking below this yellow line, and that being in a support area, also breaking below, well, it can't really. It's a very, very large support area. So diving into it to a much greater degree. That's it. Have a great trading day. Profitable trading to you.